Hi everyone, Petra here, Hospitable's community manager, and welcome to another Hospitable Hosts podcast episode. So today we have a special one because this one is a part of our The Insider, Ask Me Anything Serious in our community, where we spotlight inspiring hosts, partners, and hospitable team members to give community access to their insights and stories. Today we have our CEO on, and he's going to talk more about the host token, hospitable exit strategy, capital distribution, and much more. Enjoy.
Hello everybody, this is PC. I'm the founder and CEO of Hospitable, and this is The Insider. I'm in full gear, full swag, entirely branded, and I'm available for the next 2 hours to answer any questions that you have about Hospitable. So let's get started. So first question is an interesting one from Dave, an investor into Hospitable. PC, can you shed some light on the path to the 5x growth in valuation that is targeted for next spring? Are there any comparatives to the $126 million and $365 million at a reported $900 million valuation that Hostoe raised? I know they may have been pacing on revenue and customers comparatively. So it's a bit of a difficult question for me to answer. I'm the CEO of Hospitable. I work on this every day. I've been doing it for 9 years. And I'm not the CEO of Hostoe. Maybe that's actually a great position for me to be in. But I am the CEO of Hospitable, and my job is to look at growing this business and making sure that it solves more problems to more of its customers every day. And I believe we're on a path of doing this job, as this year we've been particularly expanding the scope of what our product is doing, and it's not over yet. Now, looking at this, I'm the CEO of Hospitable. I'm also happen to be the owner of this company, the major shareholder. The business has a valuation that is well in excess of what you're referring to, which is the rolling save valuation. The rolling save valuation, which is a valuation at which customers, team members, and members even of the general public can invest in, provided they are qualified. And this is an investment that is at a valuation that is determined on the number of investments prior. In one way, you can set a token like this at a $10 million valuation for a company doing $1 billion in revenue a month. Both are completely disconnected from one or the other. We've launched this offering in 2021 at a starting valuation of $15 million. Now it's at, as of right now, $53 million of evaluation, just basically reflecting the investment interest into Hospitable. The business, the company Hospitable, has been growing at a much faster pace, to the point where basically right now we're at $22 million annual run rate, which means if we stop growing, we will basically be generating $22 million in the next 12 months. Obviously, we're still very much growing every month. And therefore, there is a bit of a mismatch between valuation that would be sought by private equity in acquiring Hospitable compared with what the rolling save valuation is at. The rolling save valuation is so discounted compared with the actual business that basically it's to a point where it doesn't make sense to Hospitable anymore. We have customers, team members that are investing right now that based on just the same day that they invest, because they have a proxy equity into Hospitable, are basically doomed to be making 7x on the same day, just simply because they now own a stake in a business that doing $22 million, has been profitable for the past 17 months, and is still very much growing. Now, you mentioned another company. I'm not the CEO of that company, but I know a thing or two about them. As I shared on my channel on September 17th, one of the things that's happening in this industry is that companies are no longer founder-led and they're private equity owned. The people may be the same and running the companies, but they're no longer calling the shots. In that there are board meetings, the shareholders are very different than the founders. And that's the case for the company you have. It's actually a very good tale, and it's actually one that probably pushed me to question the rolling save valuation in its first place, because there were two different raises, which is transfers of shares, really, that occurred within that an 18 months time window. During the first raise, there was actually a full buyout of 95% of the equity of that company at a $250 million valuation. And I can confidently say that that company was doing about the same revenue or less than what we're doing today. So this is actually a good proxy for the valuation that basically we could secure today. Later, 18 months later, the company kept on growing, and with a bit more of a private equity financial engineering, they were able to secure a $900 million valuation. The thing is, that $900 million valuation for Ostaway is the same as a $900 million valuation for Guesty, a company doing 8 times more revenue, and that basically may or may not be profitable. Whereas Ostaway is a company that is profitable, has been operating very closely to what we do for the past 9 years, really. And so we are really a good proxy to that in terms of the assessment of the opportunity. The question is, why would we keep the rolling save valuation so discounted compared with a business that is growing? There is basically a gap that doesn't make any sense. And so we have investors into the rolling save that are wondering, why exactly is this so big of a gap? And we cannot quite answer, except the fact that there's been not enough investors' interest to basically warrant this valuation. But the thing with the rolling save valuation is that we can actually do this change, and we can say, moving forward, the next investors will be tackling this, entering into the host token at this valuation. And so we'll be performing a series of adjustments over the next few months with one operation per month that basically will progressively be increasing the valuation of the rolling save to our target above $250 million, which I believe would still be discounted from the situation where the business Hospitable will be in. But to be quite clear, the gap is fundamentally because you're not investing in an instrument, you're investing in a company. That company is continuing to grow. That company is continuing to be able to operate independently with a good profitability. And therefore, basically, the rolling save valuation should be a proxy to that business. And that's basically what we're fixing it during the next few months. Hey, we're getting into the second question from Sati. Once one owns Host, what can one do with the shares or the coins? Can we hold them until Hospitable goes public? Or is the plan for Hospitable to always be community owned? Can shares or coins be bought and sold within the community? That's a very good question that basically is kind of pushing into the exit strategy of Hospitable. I believe there's plenty of work for me and for the company at Hospitable. I'm not in any rush to be selling the business. I think there's, as I said, a lot to be doing and to be regretting stopping it there. As there is such a busy roadmap and so many opportunities to be fixing more customers' problem over the next few years. But Hospitable is a business, it's a company. Property management softwares that are operating in the space have been acquired by private equity firms. They may have been purchased by a competitor. They may have been purchased by another company in an adjacent space. Those exit options remain fully available to Hospitable. There is no exit possibilities that have disappeared by having this one extra. By adding the host token and the community float, I've added one extra option for liquidity and for basically a bit more of a strategic outlook on what it should be meaning to be creating a business like Hospitable in this day and age. Now, having a community ownership of Hospitable means that there will be a massive number of those investors across the community. It basically means you will need to have a 51% float to basically be receiving 51% of the proceeds in the case of an exit of Hospitable, such as by an acquisition from a private equity firm. This is not something that can be put back in the bottle. Once you go and take this road, we have pledged those proceeds on the liquidity to the community. We cannot basically buy that back or do any kind of shenanigans or renege on that kind of particular promise. This is absolutely inalienable for eternity. So there will always be a part of the proceeds of Hospitable that will always go back to its investors, prominently its community, and therefore its customers as we wish to have you on our cap table. There is, however, something that's important to say about the liquidity path. By adding those tokens, I added one liquidity option, especially with the view of the team itself. The team is being compensated with future RSUs, so particular some compensation on the stock, and future on the token, actually, very specifically. And then operating as a bootstrap business means that basically the stock is kind of worthless. It's not being valued by third parties. There are no investors entering it. And that kind of means for the company a bit of a lost opportunity to be attracting the best talent. Everybody working at Hospitable has an equity incentive, so is seeing basically the numbers go up and to the right themselves as a business is growing too. And so the idea is that there could be, through the host token, some early liquidity by opening a secondary market of those host tokens. Right now, it's investing, so that means there's a primary issuance of tokens between an investor and the community. Later, there will be a path for those investors to be trading tokens and for everyone to basically be trading tokens with one another, very similarly to the way of a stock, except it's not going to be on a stock exchange, but that's going to be within a crypto token that basically can be traded freely, with giving an ability for the company to also be raising new capital by pledging more of its equity to the community. So that's basically one way it can work. It requires a very robust company, a very robust token with a lot of participation from investors that over time, I believe we can get there. But that basically is still some work in progress. What I can say about Hospitable going public, that is also a possible option. I think the thing about public companies is that when you see a company going IPOs, always, there's a bit of an uncertain outcome, whether there's going to be a pop like Figma recently, or there's going to be a rather disappointing one, which actually might be the case for a good part of companies. My take is that for Hospitable to be going public, there would have to be a massive brand recognition, not just within the community of hosts, but actually of the general members of the general public. And I believe companies that are pursuing to have public as the only exit path are probably, setting themselves up for failure. But hey, that's my views. Obviously, other people think very differently. Next question, this time from Doug McMaster. PC, could you expand on the path to equity? You touched on it during the September tunnel, but I didn't fully understand the process and the potential options, which is a very, very broad question. And it's always a bit of a challenging thing when I'm talking about it. First of all, because there is regulation and compliance on the back of my mind. But there is also kind of what it is and what it's not. So let me be clear. What it's not is equity. The owners of Hospitable, that's me, that's Nikita, that's the first accelerator of Hospitable, that's 100% of the equity, which is the common stock that any company is having. And we basically want to be able to raise some capital, distribute the proceeds of a potential sale of Hospitable, giving a bit of an equity incentive to the team that's working with us, without basically necessarily affecting the governance of the company, which is the thing that we've observed in so many other companies where basically you have those private equity firms that are in asset preservation mode, and the business is no longer innovating. It's basically focusing on the things that work, which is really good, but it's no longer taking any kind of entrepreneurial risk. One of the things that are keeping me excited about working Hospitable is continuing to take those entrepreneurial risks, which fundamentally means taking more ownership of more problems that are experienced by customers, solving more of those customers' problem every week a little bit more. So the way we structure this is basically with a tokenized derivative of our equity, which is structured in a safe. So it's based on the Y Combinator standard agreement, which is a simple agreement for future equity, which is an instrument that's being used across the board for any kind of startup that is not going through a big institutional equity investment. That's a tool that typically is more appropriate for small checks, early investors into startups. The concept here is that this instrument, which is called safe, would basically continue to exist during the entire lifetime of the company up until the moment where there is some liquidity. And the liquidity is the moment where it actually matters, because that's the moment when the business is being acquired or may indeed, in a very lucky scenario, be going public. There's also the other option, which is the business going bankrupt and you distribute whatever is left between the different investors, shareholders. The thing is, we want to give a stake of our business to everybody that wants to be a part of the journey. It doesn't actually have to be equity. It can be just basically a right to the proceeds of Hospitable at Liquidity. And that's basically what this tokenized stock is actually about. In doing so, that allows us to have things that are a little bit crazy in that you can have trading of that tokenized stock before the company going public, provided there is enough of a meaningful market to be answering the demand. So that's a different path than basically getting acquired at low cost or going public, but something in the middle where a company can remain private, can be focused on innovating, and still offer liquidity to its employees and to its earlier investors. Which is good also because it means also building some kind of discipline and being able to communicate to your results in public as well. Now, the process and the potential options, I think the process itself, if you want to pursue an investment, is basically you go to invest.hospitable.com, complete the KYC. If you are a US resident, you will need to provide an accredited investor verification letter because this is a private offering that's organized under the Rule 506C of Regulation D. And from there, you can decide how much you would like to invest. This is not alchemy. There is a contract behind it. The contract is made accessible to everyone that is logged in as an investor profile. You can look for the purchase agreement that's on the right, and that is the rolling safe that is determining all your rights and obligations as an investor into Hospitable. And once you've indeed purchased those tokens, once you've materialized your investment, you will get access to our investor group on community.hospitable.com. If you invest more than $5,000, you also get access, if you are also a customer of Hospitable, to our VIP support, which basically give you access to my WhatsApp, if you want to use it, but also our Slack group, so that you get access to the rest of the team, which is particularly something interesting for us as we can share feedback and receive feedback on upcoming developments of our product way earlier before they are communicated on town halls or other places. Hello again. We have a question from Michael Rodman saying, I read that an investment of $5,000 or over opens VIP access. What exactly does that include? That's a very good question. That is a reference to our support tiers, and the page is a little bit old. I think we've not changed logos in a long time. But the idea is when you invest more than $5,000, and it's on invitation only, you basically get access to what we would call the VIP support, which is you can join our Avengers channel on our Slack. So you get access to everybody from the rest of the company. Ideally, that works really well for you to share feedback. That also is a great way for us to be receiving feedback early, although a lot of that task is basically now completely open with our community platform. You're also receiving investor updates. Now, the reality is that those investor updates are now made available on community.hospitable.com. And here you go. That's the update for October. So closing the month at nearly $1.5 million MRR. And you also get a perk that I believe is not quite used enough. But that's basically my phone number. So you can actually send me a WhatsApp message whenever you need something that needs to be escalated. And whenever something important is coming up, or just to chat, which actually could be useful. That's totally fine. So that's basically what's included past $5,000 investment. There's no higher tiers, so to speak, right now. So Sat is asking a new question. Once invested, will investors receive payouts on growth, dividends, or any such thing? So the clear-cut answer is no. By investing into the host token and signing the rolling safe, as an investor, you get to receive a pro rata on the tokens, basically, of the proceeds of a liquidity event. That means when Hospitable is acquired, when Hospitable goes public, then that converts into either cash in the case of an exit, or stock that you then can trade in the case of an IPO or direct listing or other equivalent things. The other less glamorous option is that if Hospitable was going bankrupt, then you would have a right to whatever is left on pro rata of as you are based on the ownership of tokens. That doesn't give you a right to receive any kind of dividends from the company, which we kind of feel like is a bit unfair if basically the owner of the business is kind of distributing a lot of dividends for themselves or for existing shareholders. And so we don't have a dividend distribution policy. I've distributed dividends on the first year of Hospitable, never since. And now we're exclusively kind of barred from distributing any kind of dividends. So that does mean that the common shareholders are on the same level today as the host token holders. That basically there is no dividend being paid out. We're all in on a potential exit or a liquidity event that basically would allow us to receive a check. Necessarily for the host token, you have one extra right that I do not have, which is basically the ability to trade your tokens within lifetime whenever that feature is enabled by Fairmint and enabled also on the company owner side. Hey, so Hans is asking a question that is not about the host token yet. What is your unfair advantage, or put another way, what is your superpower personally and in terms of Hospitable as a company? There would be a lot to say about the unfair advantages, or nah, there would not be a lot to say. But one of the things that I always reflect on at Hospitable and how we've basically been progressing over the years is the fact that we've been really good at turning what were weak points into strength. And you could say a lot of things around product, around sales, around marketing, everything that we're doing. We try to do something a bit differently, not exactly necessarily what's following someone else's playbook, but basically that resonates really well with us. As a company, and I'm turning back into fundraising, damn me, we always heard that basically because you're a bootstrap business, you cannot achieve great things. Well, $22 million later, I tend to disagree. But the thing is that because our equity could not be put to work, we decided, you know what, there's got to be another way to make it work for the benefit of the company and for some kind of other intangible benefit, which is having your own customers into the cap table, into the receiving the proceeds feels great. It feels great now, and it will feel great a lot later whenever the business is sold. Now, Hans is having another question. In a recent town hall meeting, that was on September 17th, you mentioned that you want Hospitable to be community-owned and that the current allocation to community ownership isn't high enough. If I'm reading it correctly, the investor page says it's currently at 9%. What percentage would you like the community investment to get in to the next year or two? So you are very right. So right now it is indeed 9%. And right now, if we wanted to have some form of community ownership, there would have to be a very meaningful change to the current momentum around the host token, which is why I'm kind of sharing a little bit more openly about this. What percentage would you like the community investment to get into the next year or two? That's difficult for me to predict because that will always be reactive. That is in response to the investment interest. To increase the equity allocation, so the pledged equity towards rolling safe, there would have to be one key factor, which is that the valuation of the rolling safe is now higher than what we believe to be is the market valuation of Hospitable. And I believe it could actually technically happen because it's entirely investment based. If you had an investor putting 10 million into the rolling safe right now, that basically would pump the valuation of Hospitable maybe to a level that we no longer feel comfortable. The reason why I'm saying that is that we don't have a way to obviously decrease the valuation, and we want to make sure that every new investor is going to have some kind of ability to be in the money if Hospitable was sold the next day. So there is always going to be a discount between the rolling safe valuation and what the real business market valuation should point at, which I have a say because I can easily say I'm not selling under that price. Now, if the investment is outpacing the growth of Hospitable, that means the only way we have to control is, because we cannot lower the price of the token, is to increase equity allocation. So that creates more liquidity or more surface so that the price of the next token is going to be a little bit on a smaller slope. And that means the valuation is slowing its increase on the next investment. We would not have a way to go down, so that means the only way to make it that fair is to obviously grow the business faster than the rolling safe, which is a very healthy and comfortable position to be in. But that's basically the path to be increasing the equity allocation. Now, to have a community ownership, that does mean a very significant pool of investments over time that basically would be able to claim 51% of the proceeds. But it's an aspirational goal that would probably not be materialized within the next decade or so. I mean, I would love that to be earlier and faster. What I think is that right now, our track record on the host token is that it's been pretty lagging behind the growth of the business. That's probably my fault because I'm not sharing that again and again, but also it's far more exciting to be talking about product updates and customer problems being solved rather than basically here, go ahead and pump this token. But the host token has been a bit of a laggard behind our business growth. And now, if things were to change, then definitely would be able to pledge more equity into it. In just the same way, we cannot reduce the pledge equity towards the rolling safe. That basically there are some minimum and safeguards. And a new question from Hans. In the event of a liquidity event occurring, which shareholders would sacrifice part of their equity percentage to cover the equity distribution to the host token holders? Would all current shareholders share in a pro rata reduction of the equity percentage? That's a very good question. Thank you. Obviously, the money is coming out of somebody or something if the host token did not exist. So I think first I want to talk about preferences, not mine, priorities on the token. So basically, the host token is what's called as a preferred right. That means whenever the business is sold, you look on other priorities between the different stocks. So typically you go Series A preferred, Series B, Series C, Series D preferred, etc. And at the end, you have the common stock shareholders. Common stocks, typically those are the founders, unless some are going on very exotic setups. We are going really simple here with Hospitable. So I'm a common shareholder, just like the two other shareholders in equity of Hospitable. And so the thing is, the way it would work on a liquidity event is that first you check what is the equity allocation. Okay, it's 9, 10, 15, let's say what it would be at that point in time. And so based on, let's say we've received $100 million, or we're selling Hospitable at $100 million, which would be really, really cheap. That's a good round number. $100 million, you have 10%. So therefore, we're distributing $10 million towards all token holders. And then that basically means there is a certain price of the host token, and then we pay out everybody in their wallets. And then later, obviously, you go to the common shareholders. So that would be me. Also to your question, would sacrifice, that's 92% me, 3% Nikita, 3% and some things with the family, which is basically the first accelerators. Our proceeds will basically be reduced because of the host tokens. I think a higher priority than common shareholders on the proceeds. In that way, those are true investor shares. The investors get paid first, always, and the common shareholders are basically picking up what's left. Now, the good thing is that the cake is big enough that I'm very comfortable having that. I think it's far more interesting to have more people joining us on the journey than basically going through all of this as a solo founder, bootstrap, all alone. So that creates for me some kind of nice reward system for people that are those early investors. And I think that makes as I shared in an earlier video, that puts our equity to work. But yeah, so, and then the shareholders in that example would distribute the remaining 90% on basically their equity holdings. So in my case, well, yeah, that would be a meaningful part here, but that's not about me. Thank you for that great question. And we have another question. Do investors get a greater say in product direction versus customers that are not investing? That's such a great question, and especially to ensure it matches expectations. We are successful as a business because we're answering the demands of our customers, to whom we're selling a product, ideally at a profit. Investors have the chance of participating in the journey and benefiting from the upside as we're doing this work. Investors and customers are, to our business, first and foremost customers. We're now a business that has a bit of a meaningful scale, so 18,000 customers. I think it's easy to think that for every extreme opinion about a product, there could be at least 1,000 customers on one side and 1,000 customers on the other, that could be just as fiercely advocating for a particular direction. Our compass is going to be what we want to achieve, what is strategic for our business, for our company, and then hopefully, definitely, most of the time, for our customers as well. What we don't want to think about too much is actually about the investors. The fact that we are bootstrapped is actually giving us an ability to take a sustainable long-term view. We're not looking to have a pitch deck that looks great for the next 18 months. We don't have a board meeting that basically is deciding whether this company is going to stay afloat or not. We are able to take a long-term view and give time to some of those features, to some of those developments and initiatives to basically come to fruition. No, being an investor doesn't get you a greater say in the product direction, because the thing that's so much more powerful in any company, including VC funded or private equity backed company, is the voice of the customer. You don't need to have an investor layer on top of that to be heard. As for the investors, they are perfectly well heard when it comes to operating the business, helping growing a little bit faster, and providing feedback on how something has been done. They are trusted because they have that skin in the game. That may not be the case for other customers or other stakeholders in the company. And that's a great thing to be having amongst our friends that participate in the journey with Hospitable. And we have another question. Hospitable is not a public company, so you don't have to share much reporting publicly. Or will I know how the company I invested in is doing? That is absolutely true. So we are a private company, even with our tokenized stock, with the host token. We operate as a private company, just like OpenAI, just like SpaceX, another far more normal company, like probably yours. We do not have any obligation to basically be disseminating information or a large prospectus against the condition of our offer of a private offering. So there is indeed not like as you would go with a private company going public, like an S1 form. What we have is a commitment to be sharing the numbers in a regular cadence. So on the community, we're going to be sharing our investor updates, which is going to be a day one update. So yesterday was the 1st of October. We have shared the numbers, like a monthly recurring revenue, a bank balance, team members, the number of hosts in circulation, the price of the last host token, and some customer satisfaction indicator, so that basically we can engage our investor community around basically the latest with Hospitable. Later, there's going to be what we're going to call a CEO snapshot, a CEO editorial, basically reflecting on what's been going on in the company at Hospitable and what we're contemplating to do. And there's so much to share right there. At mid-month, there will be a proper financial update by Eurobi, our group financial controller. We'll be sharing revenue, gross profit, OPEX, splits by cost center, So we know where the money is going from a revenue perspective, and our net income, probably some more ratio for some kind of a financial analysis. And then at the end of the month, we'll also have a bit of a spotlight from the senior leadership team at Hospitable to be sharing how we are approaching a particular problem, how we are growing the business in a particular direction. That is a monthly cadence. And what we actually are looking for to do is a mini earnings call on a quarterly cadence, so probably a little bit of time after the quarter has closed. Make sure that we're reviewing those numbers and sharing simply a bit more of the detailed data and sharing that with our investors community and giving them a chance for some Q&A, as you actually can have in many public companies. So we want to keep engaging investors, people that believe in our company and want to see it grow. So we want to share them how we are doing and what are specific problems. We also want to hear from them about what they believe is maybe a challenge or a problem that they're facing, providing us feedback. We don't need to wait a quarterly earnings call to do that, because they would be on our community, they would be on our Slack for some of them directly. But the idea is basically building a stronger practice of this accountability to a market. I think we could stay for a long time hidden. That's not obviously the perspective as we are launching and relaunching the host token. The perspective is more to build accountability and make sure we have trust in the numbers, so that we have this little bit of intensity built in our business that we still have to report to our investors. It may not be a typical public company quarterly earnings call, but that is nonetheless a moment of accountability for the business towards its investors. And I believe there is nothing to lose from that, from an ethics or performance perspective.
Thank you for listening. If you enjoyed the episode, make sure to like, share, and subscribe on your favorite podcast platform. Have a wonderful day ahead.